All right, let's dive into a stock that has been on an absolute tear, American Superconductor Corp, or AMSC. We're going to play detective today, because the big mystery is how this stock managed to pull off such a massive surge in just a few short months. So let's follow the clues.
And the first piece of evidence is a huge one, a whopping 79% surge in only 3 months. I mean, a move like that doesn't just happen by accident. So what on earth was the engine behind this kind of explosive growth?
So let's trace this rocket launch, shall we? If you go back to late June, the stock was just kind of chilling around 34 bucks. But then, by mid-July, something lit the fuse. It just accelerated hard all summer, hitting a peak of over $65 in September before cooling off just a little. Yeah, this was no slow burn, this was a straight-up explosion of buying.
To really understand this, we've got to look at the evidence from both sides of the coin. So first up, let's look at the bullish case. All the technical signs that are screaming that this powerful trend might have a lot more room to run.
The first thing the bulls will point to is this beautiful relationship between price and volume. You're seeing consistently higher highs and higher lows. I mean, that's the textbook definition of an uptrend. But here's the kicker. The biggest leaps in price were backed by gigantic trading volume. Take July 31st, over 5 million shares traded hands. That signals real conviction. That's not just hype. That's big investors confidently putting their money to work. Now, to dig a little deeper, analysts use this tool called moving averages. You can just think of it as the stock's average speed over different time frames, say the last 5 days, 20 days, or even 200 days. It's a great way to cut through all the daily noise and see the real underlying direction.
And this right here is where you really see how strong this trend is. The current price is just floating way above almost all of its key averages. It doesn't matter if you look at the short-term 20-day average or that super important long-term 200-day average. The message is loud and clear. This stock's momentum, both recently and over the long haul, is incredibly bullish.
And the good news for the bulls doesn't stop there. It's like looking at a pilot's dashboard, where a whole bunch of other technical indicators are just flashing green. Tools that measure momentum? They're positive. Others that tell you how strong the trend is, they confirm this isn't just random market chatter. And the ones that track buying versus selling, they suggest that the big money has been quietly piling into this stock. The evidence is pretty overwhelming on this side. But you know, any good detective knows you have to look at all the evidence. A rally this fast, this furious, well, it can't just go up in a straight line forever without taking a breath. So that brings us to the crucial question. Is it possible this is just too much, too soon?
So now for the other side of the story. Our investigation is going to pivot to the warning signs, those little clues that suggest this powerful rally could be about to hit a speed bump.
A really key tool for this is the RSI, or Relative Strength Index. It's basically a momentum meter that runs from 0 to 100. If that reading gets too high, and we're usually talking above 70, it can be a signal that a stock has been bought up way too aggressively and might be due for a little cool-down period. So, where does AMSC stand right now? Its RSI is clocking in at 62.99. Now, it hasn't crossed that critical 70 overbought line just yet, but it is definitely knocking on the door. You can think of it like your car's engine temperature gauge. It's not in the red yet, but it's definitely creeping up into that yellow zone. It's running hot.
So, to put it simply, the RSI is telling us that this buying frenzy might be running out of gas. It's a clear yellow flag, and it's signaling that the risk of a short-term pullback is definitely on the rise.
And that RSI isn't the only warning light flashing on the dashboard. Another short-term momentum gauge, the stochastic, is deep in overbought territory. We're also seeing some really high volatility, which means bigger and, frankly, riskier daily price swings. And to top it off, the price is pushing right up against the upper edge of its recent trading range, a level that often acts like a temporary ceiling. So what we have is a powerful uptrend that's running into some serious short-term headwinds. What does that all mean for the future? Well, now we need to try and map out the key levels and the potential paths this stock could take from right here. To map out what's next, we have to know the key battlegrounds. Think of resistance levels as ceilings the stock needs to smash through to go higher. And for AMC, that's at 64.49 and its recent peak of 65.58. On the flip side, you have support levels. These are the floors that have to hold up to prevent a drop. And for AMC, the most critical floor everyone is watching is right at $60.05.
So using that price map, the technical analysis really points to 4 different possibilities for what could happen next.
First up, we have bullish continuation. This is the dream scenario for anyone holding the stock.
The buyers just regain control, they push the price right through that $64.49 ceiling, and they go on to challenge the old highs. The strong trend just picks up right where it left off.
Scenario number 2 is consolidation. You can think of this as a healthy pause. The stock just kind of trades sideways for a bit, maybe bouncing between $60 and $64, and that lets those overbought indicators cool off before it decides on its next big move.
The third scenario is the bearish one. This is where those warning signs we talked about finally win the fight. The stock breaks, and I mean decisively breaks, below that critical floor at $60.05. That would signal a more significant pullback is coming, probably down towards $58 or maybe even lower. And finally, there's just plain old sideways movement. The bulls and the bears are pretty evenly matched, the signals are all mixed up, and the stock just chops around in a tight little range, basically waiting for some new piece of information to give it a clear direction.
So let's bring all the clues together. Our investigation really uncovers this classic market showdown. The bull case is rock solid, based on a really powerful long-term trend. But the bear case is just as compelling, pointing to short-term exhaustion and suggesting a pullback is not just possible, but maybe even likely. When it's all said and done, this entire technical picture really boils down to one single number: $60.05. According to this analysis, as long as the stock stays above that support level, the bulls are still in charge. But a firm break below it, well, that would hand the reins over to the bears.
Which leaves us with our final big question. We have this powerful trend staring down some very clear short-term risks. The lines on the chart are drawn. Now, the market just waits for a catalyst. Could be company news, an earnings report, a broader market shift, something that will finally decide which path AMSC is going to take next.